Hello and welcome to today's webinar, Government Contractor's Guide to Achieving Project Management Excellence, presented by Neosystems. I'm Don Carnevale, Marketing Director at Neosystems, and I'll be the moderator for today's event. If you have any questions during the presentation, you can enter them into the Q&A area within Zoom. We will have some time at the end of the presentation to address your questions. Also, we will make the webinar recording and presentation slides available to all registrants in the coming days. For over 20 years, Neosystems has been the leading provider of back office services for government contractors, including outsourced accounting, finance, payroll, HR, reporting and analytics, hosting, IT, and information security, including CMMC compliance. We're fortunate to have a panel of distinguished speakers with us today. Joining us shortly will be Susan Mitchell, Chief Services Officer at Neosystems, and Sarah Sawtell, Vice President of the Project Management Office at Neosystems. Here's a quick look at our agenda. We'll begin by discussing some foundational elements of your federal contract. We'll then look at specific areas of project management, such as cost concepts, estimating, contract kickoff, and financial management. Following that, we'll share some sample reports used by project managers and also discuss the importance of performance and communication in the project management function. Now I'd like to hand off to Sarah Sawtell to get us started. Sarah?
Thank you, Don. All right, well, this may be the most important piece of the whole federal contract project management areas, and that is understanding your federal contract. So you're going to want to spend some time. It's well worth it. It's a valuable amount of time. So you're going to want to look at the contract type, make sure you understand it, the scope of work, all the clauses involved, and the regulatory compliance. So inside of that, you definitely want to look at payment terms, timelines, deliverables, when they're due, and how to go back and forth with your contracting officer and technical point of contact for those deliverables, the metrics that they're expecting to receive, and what to do if something needs to change. So that contract modification process is going to be really important because, you know, things never change. So with that, you know, just spend some time getting into it and make sure you understand, ask questions, sort it all out before you start, and go from there.
And I was going to say one thing I would like to add on this, Sarah, is specifically in regards to the contract clauses. So as many of you know, there's all these nice CMMC related, regs and things that continue to come out and everything like that. So you really want to pay close attention to any of the new clauses or anything that, might come into your contract that, when you're reviewing them or something, or things that don't apply to you. So like things such as like if you see something in there regarding, like that you can handle CUI and things like that, but your contract and what you're doing has nothing to do with CUI, then that could be something where you want to go back to the contracting officer, when you're reviewing the contract before it gets into signature, to make sure that, all the appropriate clauses are in your contract. The other thing I would say too is in regards to deliverables. A lot of times, like, you want to make sure you understand the deliverables, because a lot of times you might have something that comes across in your contract that you might have to either come up with customized reporting, you might have to rethink like your standardized, kind of how you're setting up your projects in your financial system, or how you're tracking like certain seed roles or things like that from a technical perspective and things. So again, always good to read through, understand that contract well in advance.
Right, absolutely.
Next slide, Dawn. So in regards to, a lot of this, so what I would say is I want to talk about some of the cost concepts. So for those that have been doing, government contracting for a number of years, some of these will be, you might already know these, but I always like to talk about these when it comes to project management, because if you're a new project manager in the GovCon space or anything like that, there's just key cost concepts that you need to understand as you're going to be going through that project management process. So the first one that you have to get used to, because again, it's something sometimes new for some folks, is the segregation of direct versus indirect costs. So this is a really important thing in government contracting. When we talk about direct costs, we're talking about the costs that can be specifically identified to that contract. So what that means is, if somebody is working on that contract, and that they're working on that function, labor, they're going to charge to, they're going to have a cost code in your accounting system that they're going to charge to that, that accurately reflects that they're working on that project. The other one is your other direct costs. So when you're coding any, like travel, or, and I kind of put travel in there too, but if you're coding any expenses, say you have software or something you're purchasing, or you're purchasing a good or something that needs to be charged to that contract, that is also, needs to be identified specifically to that. Same thing with subcontractor costs and travel. You need to accurately, you have to make sure that those costs are being accurately recorded. The other thing that you want to take into account are indirect costs. So from a project management perspective, for a government contract, it's not just your direct costs that are going to be showing on what I'll call your project income statement, but it's going to be the indirect costs, which burden those direct costs on your income statement. So what that means is it's the other costs to your project that aren't specifically identifiable to that one project, but are accumulated in logical cost groupings and applied to your project. So a good example of that is labor. So like if you're charging labor to a direct cost, to a direct project, you will have things such as fringe. So you're paying for these fringe costs for your employees, but you can't necessarily identify, the cost of, say, their FICA charges or whatever. You can't necessarily identify that to one cost objective. There would be a few that it might have to, allocate over. So that's an example of an indirect cost that will be applied to your projects. So typically in the GovCon world, you'll have a fringe, an overhead, and a G&A. There are different flavors of that will happen depending upon your business and the indirect rate structure that makes sense for them. But in general, that's kind of, the typical ones that you will see. So when you hear the term burdening is that process of allocating those indirect costs to your direct costs. Next slide, Dawn.
And Susan, a good thing to do is to review that contract up front to see what's allowable and not allowable within those sections, correct? I mean, to make sure that there's nothing that you were expecting to attribute to your project that may or may not be allowable.
Correct. And that's a good point. So in regards to allowable and unallowable costs, so there are certain costs that the government, so I'm going to set that aside for just a second, Sarah. So there's certain costs that are unallowed, like within the government kind of costing concepts, you have allowable versus unallowable costs. So unallowable costs are essentially costs that the government I can't even talk. Is a cost the government does not consider necessary for government work, or they contradict public policy. So when we talk about unallowable, there are things in the FAR, specifically FAR 31201, that can be expressly unallowable. So essentially what that means, and I put an example on here, but it can be things like alcohol. There's certain, costs that basically you're not going to be reimbursed for. So those are going to be, basically pulled out of your indirect rates. The other thing in regards to allowable versus unallowable is that if there's costs like say you have a business meal, or something like that, they're also subject to like reasonableness, allocability, like CAS, if you're covered by the contract, the cost accounting standards. So there's certain, other kind of factors that you have to take into account with that. The other thing, as you mentioned, you can get into things where you will have a cost that per the FAR, it might be allowable, but per the contract, it has further delineations on it for whatever, for whatever reasons, for whatever you're doing. So in regards to what Sarah was saying, you want to make sure that those unbillable costs per the contract are also classified in a way so that they are not included on your invoice, and go back. And from a project management perspective, you want to know that because those unbillable costs would be potentially something that would affect your profitability, like your bottom line on it. The one thing too that you want to take into account is that burdens associated with those unallowable or unbillable costs, right? Those are going to be also, like those burdens are going to follow the cost. So that's another thing to take into account when you're talking about project profitability. Next slide, Dawn. So the other cost concept that and I always love talking to project managers about this because those accountants, we accountants always love our indirect rates. So one of the things that you'll come across when you are, say, if you're looking at your project income statement, is there's different types of rates depending upon where your company is in that year's kind of rate process. So you'll have something called forward pricing rates, and forward pricing rates are essentially estimates that are developed. They're used for bidding rates, for pricing and negotiation, and they basically they're estimates of anticipated future costs. So in some cases, if you're working on a proposal that it might be a long-term contract or something like that, and you're trying to come up with the basis for how you're going to burden costs, say 3 years out or 4 years out. A lot of times companies will have a forward pricing rate agreement that they will have in place with the government so that when they go to do those bids and go to do those things, they have an estimate that's in place already, that has been approved by the government. The second thing that you'll see is billing rates. So billing rates are used for invoicing and are established temporarily for interim reimbursement of incurred indirect costs. So if you have a cost type contract, what this means is that the billing rates that are established, so you'll have your forward pricing rates, but when you get into a year, you might have a like a more up-to-date forecast for that year, and that will end up being what your billing rates will be like approved for that year. Okay, so you'll have your billing rates that are in, which is what you use throughout the year, and then once you get to the end of the end of your fiscal year, you'll have your actual rates that will then come out. So once you have your actual rates, those are used for adjusting. Basically, your actual rates are the final rates that are used on your contract, and you will do a true up. So if your billing rates and your actual rates were different, you would go through a kind of what I call a true up process. And then those rates, the actual rates for that year, are what are used for closing contracts and basically for are what's submitted, like what get approved when you do your incurred cost proposal. So the incurred cost proposal is what the government uses to basically review your actual rates and give you kind of that confirmation. Okay, this is, we're in agreement. Here's your actual rates. And you'll get a final like rate determination letter. So as a project manager, throughout the life cycle of your project that you're managing, you could see some of these different rates that will affect like what you're seeing. You just need to understand how those will affect you and how those will, play into the project profitability and the income statement. The other cost concept that I want to talk about, because this one this one sometimes confuses some PMs, is there's a concept called total time accounting. So what this means is that if you have a salary, basically all employees should record all their time that they've worked. So if you have, say, a regular 40-hour week and an employee works 55 hours or something like that, then what that employee would record the 55 hours. And if they worked, if their salary was $1,000 for that week, that $1,000 would be, apportioned out over the 55 hours. So total time accounting can have an effect on your project costing, because if you say you estimated that an employee was going to work all 40 on your project, and that would be $1,000 costed to your project, but then the employee ended up working 55 hours, 40 were on your project, 15 say were on another one, that would mean that the cost to your project would be lower because those costs have been apportioned out. So that's kind of how total time accounting can affect you as a project manager and what you're seeing on your project income statement. Next slide, Dawn. So in regards to estimating, I always just like to point this one out, because with government contracting, you want to estimate the way you're going to accumulate, right? Like the actuals and everything like that. So with your estimating, and a lot of PMs, project managers, have, they play a role in that estimating process. Like they are, they're usually there assisting with the responding to the RFP and everything like that. I know many government contractors have that, where the PM kind of sees the entire project from cradle to grave, like from the time of they were pricing it to the time of contract closeout. So I always just like to go over kind of some of the estimating concepts. So you want to make sure that the pricing is consistent with the company's policies and procedures. So if you have rate tables that you pull, or you have standard kind of like aggregated rate tables or things like that, or if there's certain, like the forward pricing rates, if your company has a forward pricing rate agreement, you want to make sure you're using, the forward pricing rates. So there's typically established estimating techniques that your company will use, and you want to make sure you're adhering to those. Always make sure that the indirect, that's kind of goes back to what I just said, indirect rates, labor rates, and other factors are correct. The pricing is consistent with the technical proposal. So I know that seems basic. I know that seems like something that you would think just happens. But again, that's just one of the things that I always just like to point out, make sure that the two align. Make sure the work is realistic. So, and that the estimating reflects a clear understanding of the requirements. So if you're looking at the RFP, that, the pricing makes sense. A lot of you will have, these great proposal teams, that help with that stuff and everything. But again, from a project management perspective, I always like to see these things as they're going through the process, because if I'm going to inherit it, and I'm going to be running it, I'd like to know what happened in the beginning. And then the basic mathematical calculations are correct. So again, seems basic, but always a good thing to make sure of if you as the PM are going to be having to do all these wonderful things that Sarah talked about in her first slide, which is, communicate and everything with the contracting officer. Next slide.
All the fun things. All right, so back to me. So contract kickoff. So option years on the contract, this is easy in the beginning, but as you go along, if you have a multi-year contract, there's things that you really have to plan for and pay attention to, right? So you may have milestones and guardrails set up, but there's things you'll have to do to complete a year and things you'll have to do to start the next year. So again, this is all about details. It's all about the details. You could have a song in government contracting. So followed by that, more details, accounting, classification reference numbers, and the contract line items, making sure all of your items are lined up where things are going to go and what you need to do. The type of contract, again, I brought this up at the beginning, revenue recognition, making sure that you are utilizing whatever tools to be able to report revenue correctly, billing requirements, when you need to bill, how you need to bill, the cycle of how long it takes, and if they have questions, and responding and time periods to that. You need to be aware of that to make sure that you're interacting with your contracting officer properly and getting done what you need to do. As Susan mentioned earlier, non-standard reporting, make sure you understand what you need to provide and that your tools are set to it and that you can, provide what you need to at the right times in the right ways. The types of costs, again, to be charged as unbillable items and other, fun things that go along with the contract. Susan, before I move on, any other thoughts on this one?
I think the main two on this, particularly with the contract kickoff, is that the main is many accounting systems, like, you want to make sure that you get these things set up correctly at the start, because if you don't have that contract kickoff meeting, in many cases the contract will start, and then you get down the road and then somebody comes back and says, well, we didn't see that reporting requirement, or we didn't account for this, or we didn't account for that. And there's nothing more painful than having to go back and reclass things or redo things because the contract and the setup was not thought out at the start. It not enough can be said about the kickoff, or at least, and some people will say, well, we don't want to do it for every project because they're not that big. I would say then, make it an email template, do something like that, but make sure that everybody is on the same page so that you start off on a good foundation and that everything is accumulated and going the way that you need it to go.
Great advice. Yeah, you don't want to go back. Absolutely. Next slide, Don. All right, so just in review, timesheet charging, you gotta check everything, right? Details. Time is charged to the correct contract, the correct task, the right labor category, that timesheets are properly and on time, expense reports, that you have the right things on the right days, that it was followed exactly the way it needs to be followed. For example, this is just a good example. You got to communicate the alcohol, right? We talked about this. That's never really allowed on receipts. You get put it on a separate check, right? Don't put it on the check. It gets harder. Communicate to your team the things that they need to do to make everyone's life easier. So expense reporting, getting those things in and on time. Someone in this room that's talking right now is not good at turning them in on time. I heard. So, getting things in on time and quickly and following up is good. It's the way to go. Anything to add, Susan?
No, I would say the one thing that I would say on some of these things too is a lot of the latest, these are things that haven't changed over, the course of many years, like with government contract, project management. The one thing that has changed is some of the tools that we have available to us. So, a lot of the tools now can help us, do some of these things. So what I would say to the project managers that are out there is that, look at the tools that you have access to. And even if it's a tool I'm, that you've had for a while, they're always coming, like, a lot of the application vendors are always introducing new things. They're always introducing new things to make your life easier. And even and I'll use Delta as an example. So they put out, like a press release today that they have Harmony, Delta Harmony that's coming. That's basically, it has a lot of great functionality that's going to come to it that is going to make the project manager's life easier, with dashboards and, AI and things that will help them. So what I would also say on these things is just, look at the tools that you have, and then again, keep looking at them, because everybody right now is making updates. They're bringing great things, into the market. Next slide. Sorry, Sarah.
Oh, you're good. You're good. All right. So vendor invoices, you want to make sure that, you received everything that you were supposed to receive, the right contract, the task is indicated properly, the billing amount is correct, and monthly accruals and estimates at completion, if applicable. All of those things are really important. So just, checking, it's all about the details again. And then, project profitability management. The one thing I would say is, if everything looks really good, that's when you should definitely double check. If everything's looking, you're doing really well on everything, that's the red flag there. You want to make sure everything's in, everything's accounted for. If it's too easy, probably missed something. Just double check at that point. So little tip.
Or you pat yourself on the back because you're a good project manager and you're
You double check.
estimating.
You're like, this looks too easy. I'm gonna check. This looks too right. You know,
Yeah,
but definitely a good time to double check if it's looking green across the board. So, all right, next slide.
okay. So the other thing that I kind of want to talk a little bit about in relation to, government contracting and, project management and, looking, usually the things that come back on the project manager that they're asked to answer and things like that. So one of the concepts is a thing called unbilled receivables. So for a lot of people, when they first, come to GovCon, they're like, what is this? What are you talking about? So what that is basically the difference between the revenue taken and the amounts billed. So everyone, sometimes people go, well, why would that be? Why would I ever have a difference, right? So in a lot of cases, like what we'll talk about here is kind of some of those reasons. So the first one, when we talked about this a little bit, which is the indirect rate variances. So we talked about that before, where you could have billed, so kind of pulling that thread, you could have billed your, throughout your year at the the billing rates. But then when you get to the actual rates and those, come in, you may not have billed those yet. So you will have the rates might be reflected, might be off. So that could be a indirect rate variance, could be something that's in your unbilled receivable that's causing you a difference. The other one is retainage. So in many contracts, government contracts, you will have a retainage amount that is on, the contract that throughout the course, depending upon the type of retainage, because there's different types, you could have throughout the course of the contract this retainage that you're holding on to. So you might be taking revenue on that, but then that retainage isn't going to be billed until a later time. So that could be something that is causing, a difference, that is causing you to have an unbilled balance.
Can you explain a little more what retainage is?
So we could have retainage. So as an example, you might have a retainage for, oh gosh, I'm trying to think of one off the top of my head. Like sometimes it's just a percentage like that they will hold back until the end of the contract. So it varies. Sometimes it could be, yeah, I can't think like off the top of my head right now. I can't think of a retainage, but, so then it could be amounts to be billed. So it could be something like where you had a cost that came through that you're not quite prepared. Like for whatever reason, say you had a question about it or something like that, it might be something that just the cost hasn't been billed. It could be cost accruals because you don't, until you have that expense that's actually come through, you don't bill cost accruals on your invoices. So that could be another thing. If you've had to accrue costs that you have not been able to bill yet, that could be something that's causing it. If you had a problem transaction, so if there was one that came through that you were not sure, like what is going on with this. And the other one could be if you as a company are taking revenue on at-risk amounts, which means you are above your contracting, essentially the contract value, but you have reason to think that you will get a, change order or a modification or something. So yeah, so we'll continue on, and then actually we'll go back to, sorry, it's funny because I evidently have a client that's on here that just IM'd me fee retainage to remind me that of fee retainage. So that's another one that could be on there is the fee. So then the other item, the last piece that I will talk about are accounts receivables and collections. So that's another one that you will get the call typically from the CFO or the controller or somebody that's doing collections at your, at your company that's looking at the AR and things like that. So they typically, the project manager, they will reach out to you and they will ask you, like what's going on and things like that. So from a project management perspective, it is always good to stay on top of your AR. So, the age of the invoice, understand any disputed costs. So as Sarah was talking earlier, it's good to go, to have a good idea, keep that open line of communication, know about any of those disputed costs early, work with whoever you need to get those resolved. The other one that can hold up a payment of an invoice is incorrect billing formats. So this goes back to the very beginning when we talked about the contract kickoff and having everything set up the way that it needs to be set up so that your billing and everything goes smoothly. So that is one that I have seen, quite a bit, that will cause an invoice to get kicked back, is that somebody didn't set it up correctly from the start, and then it got down the road, and then nobody knew that the billing format wasn't right for 2 months or something. So that's why we always go back to read the contract. And then other contractual issues. So there's a variety of other things that can happen. But again, you as the project manager, you need to keep the pulse on that. So you should know before anybody if there's going to be AR or collection issues, because you have the pulse of that project. Next slide. So I wanted to just kind of give a little bit of an example of a project income statement. So this is a typical report, that many financial systems will have. Some do it better than others. But again, as I was talking a little bit earlier, this is this is how for years, we've looked at, a project income statement, and I'll talk about a few other reports. We've looked at other various project reports, but where things are headed right now, which is very exciting for me, I think, is that the technology is updating so fast and so rapidly that the things that we as project managers used to go in and have to go, print the report and go look through the report and do all these things, AI with AI tools, dashboarding tools, and everything like that, basically, you can tell the system when you want to know something, like if something's off or if something's gone awry, or even if you're at the 75% of your funding ceiling, all of those kind of things that we've had to keep up with for years. There's all this great technology that helps you now do that. So, so like I said, there, I talked a little bit about the Deltek one. If those of you have, I don't know how many of you have ever explored any of the Microsoft tools. There's Microsoft tools to help you that come as part of your team, part of your Microsoft 365 application. There's the Power BI, there's the Power Automate, there's all sorts of things that can help you. So take advantage of the tools that are there for you, and make your life easy as a project manager. Next slide, Dawn. So this is just an example of, so if you are a project manager, say you need to dig into the details. So you have these tools that are fantastic that have alerted you that you have a problem, and you're wanting to go look at the details of, transactions and stuff like that. So there's many reports, that you can print. What I will tell you is these days, I don't think I ever actually print a report to paper. Everything that I have is essentially either coming to me in an email or it's all electronic. So it's, again, I focus on the technology, but use the reports and the tools that are available to you to make your life easier. So this one, like I said, this is just an example of a report that I can get that shows me all of the costs for a specific project by org, by the type of costs. It will give me detail. This was from my demo database, as you can see, but it will give you the details kind of on what that cost was for. Next slide, Dawn. And then this is an example of labor reports. So again, as you're analyzing, once you kind of get into your project and you're looking at things and you have, you see issues, or you see, oh, okay, I need to dig into that some more. There's reports out there that can help you. But again, the other thing that I go to is the technology now is getting to the point where you can say, you could ask, the system your question, and it will come back and tell you, oh, if you asked it, where is the project off from the budget? So if you had your project budgets in from what you proposed and you estimated, and you had that in the system, you could actually, it's to the point where you could say, where are we off and what's throwing my profitability off? And the system is going to, it's going to answer you. So I think my main thing that I would say is use all of the tools that are available. Again, I go back to the tools, Sarah. Like, use the tools that are available to you.
Absolutely.
Next slide. Next slide, Dawn.
There we go. So, it's all about performance and delivery, and there's a lot of different things depending on the nature of your business, right? But quality assurance, testing internally and then getting through the testing with your customer of whatever you're providing. But there's going to be clear guidelines again in the contract of what that looks like, the timing, the sign off required. This is the time to be very formal and make sure you get all of your ducks in a row, that everything's tested, everybody's happy, and get through quality assurance. Risk management, you're going to use, again, project management tools. We're going to go back to PMBOK, right? You're going to have a risk register. You're going to update the impacts and things as you move through your project, right? Risks are going to change as you get through different milestones, and so you're going to want to have those strategies prepared. You want to work with your customer on the strategies of what's going to happen when something is to happen, and then actually work those if something does come up. So you want to make sure everybody's comfortable, you're documenting, you think through all the things, you keep adding to that risk register, and you manage it really well. Tracking deliverables, again, you can use deliverable tracking, tools, and make sure that you're on, you've delivered everything. It's in sign off, it's in approval, it's back, it rolls up to something bigger. Make your life easy. Make sure that you're tracking everything, upfront and visible with your customer and where it's at, and who's responsible at that point for sign off or providing your deliverables, and that'll really help you with all the other pieces in the contract. Compliance audits, making sure you have what you need when you need it, you're tracking to it, and you have everything in order for those audits, and you're good to go. The last piece, I think, is the biggest piece and the thing that's brought me the most success, and that is managing expectations with the contract officer and the technical point of contact. This is not the time to hide out or be quiet or keep something in your pocket, right? You want to build these relationships from the beginning. And you want, your contracting officer may not be able to come to all the things, right? So, I recommend check-ins, what I would call like executive stakeholder meetings, depending on who it is, your technical point of contact as well. Offer that concierge service of meeting with them whenever they're available, keeping them up to date with what's going on. Even if you're sending out status reports to everybody, right? Check in, see if they had a chance to read it, if they had any questions, give them, a primer, give them the tone of what's going on, maintain open lines of communications. Those two folks, the technical and the contracting officer, very, very important, right? Make sure they're in the know. They know what's going on. If something comes up from the project team, they should already know, right? You should make sure that they're aware as well. And that, they have multiple projects, and the project team may be totally in, but that concierge service really of open lines of communication will serve you well in all things. Anything comes up, you have that line of communication, go fast, make sure they hear it right away. Don't keep anything in your pocket. And that'll really help you in all things, with so many details and so many things going on. So that is next slide. All
So
right.
now I think we have any questions.
Right, Dawn?
Yes, thank you, Susan, Sarah. Great information, great insight. We do have some questions that have come in. We're going to get right to those. First one is direct cost question. When a cost element is only partially allocable to the project, but the business has already paid for the entire cost element and does not foresee getting reimbursed from another project, is only the portion allowable to allocate recognized under direct and the rest under indirect, or can all of it be expensed as direct?
Okay, I'm gonna have you read that again, Dawn, because that was a lengthy question.
Very good. When a cost element is only partially allocable to the project, but the business has already paid for the entire cost element and does not foresee getting reimbursed from another project, is only the portion allowable to allocate recognized under direct and the rest under indirect, or can all be expensed as direct?
So that one, boy, I have so many other questions about that question. So I would only charge to direct the out, like to the project, that the piece that was supposed to be direct to that project, right? That would be all that that project would be charged for. The other piece of it, I would have to understand I would need to understand more about that other piece that is left. And when I say that, what I mean is, so they went ahead and paid for it, but what did they do with that item? So, like, was it benefiting the rest of the company? Was it, just that they overpaid? Like, I have so many questions, more questions about this particular item. Um, so I would say whoever put that question in, send me an email and we'll have a further conversation, because it's not as necessarily cut and dry. I have many questions about that cost.
Okay, very good. Thank you, Susan. Next question. What is the biggest misstep you have found as you go through the project management process in a government contract?
I think if I could take this one again, it's that upfront time spent on understanding, right? That's so valuable. And even if it's a small project, or even if it's, a quick project, or even if it's, all of those things, it's so valuable to spend the upfront time to understand, get your questions answered, clean up anything that doesn't belong. Like we talked about that CUI, for example, if it doesn't apply, get it all, crisp and clean, and then set your tools correctly from the beginning. That'll save you so much pain in the end, spending that time. So it's very valuable. Don't sleep on it. It's well worth every minute.
Yeah, and I would, to add to that, like when you talk about project missteps, like in my history of looking at projects and doing like process going, kind of doing root cause analysis, right? So in a lot of cases, when you get down to the road and it was like this deliverable, didn't get out to the customer, or this seed roll wasn't on time, or various things, the invoice had this problem, or all these kind of things. When you go back and you look at root cause, it always ends up going back to that very beginning, when the project was set up and everybody understanding what was in the contract, and was the project set up appropriately to accumulate the costs and deliver all the seed roll, like do everything that you needed to do per the contract. It always goes back to that being a root cause problem.
Agreed.
Okay, next question. Would you recommend using AI to evaluate the details of a government contract?
So
Yeah, go ahead, Sarah.
I was going to say, use AI as much as you can, right? We're all for it, but AI likes to summarize. So especially in the beginning, make sure you go through the details. I think whatever AI recommends, those are hard hitting things you should pay attention to. But in the analysis of the contract, it is human being has to do it from the beginning first, right? You have to understand it. But in all the other things, setting, using it as tools to call out things and and point things out, that's a great way to do it. But you should still be looking at everything, right? So great ways to find things to point your attention at the right times, but you really have to look at the details at the beginning and throughout, but use your tools appropriately. Susan, what do you think?
Well, what I was going to say to that is I think the AI tools, they definitely have their place, right? And they can definitely help you. And like you said, they can definitely point out, the important things and stuff like that. I think where I have seen them where they have some challenges, they're still maturing, right? They're still learning, they're still, kind of getting to where they understand these things. So again, like Sarah said, is like when you initially start using like one of those tools and everything like that, you really need to kind of look at like what it's giving you versus what the actual contract and everything says. Because it'll get you, so far along, but you do need to do, some good hard looking at it. Because like I said, there's still just some things where it will phrase things weird, or it will, it's not quite there yet.
Agreed.
But it can definitely help you. Like it can definitely, point out the big, things that you need to pay attention to and everything like that. So
Yeah, supplement. I think it's a really great supplemental tool.
correct.
You shouldn't rely on it primarily. You are, your project manager and your project team, you're the primaries. You can use it as supplemental tools to help flush everything out. But yeah,
Okay, next question. What is the most commonly used project management theory?
theory.
So I think Sarah, this was
Yes.
the
Yeah, I
I
got
think
it.
this
Yeah.
is
The
talking about
waterfall
like,
versus
yeah.
agile question that we always get. Yeah, absolutely. So I think, waterfall is where government makes the most sense, but we need to, agile is the way that we all work, right? So there is definitely, the hybrid, which is called Wagile, right? So within a waterfall, framework that makes sense from beginning to end and has the nice milestones that would follow along with a government contract, you can apply agile principles within the work, within the items, within the things being worked on, within the milestones to get those things done quickly and efficiently and move fast. So I think for government contracting, Wagile is probably the most used project management framework theory that is being used in this space. Would you agree, Susan?
Yeah, I would agree. I just always project management theory always is an interesting thing to me. So
Agreed. Always changing, always getting better.
yes, always changing and dynamic.
Absolutely. Good question, Don. Thank you.
Sure. And we did have one other question. Susan, I think this goes back to some content that you were presenting earlier. What software were those sample reports from that you showed?
So those sample reports were from Deltek CostPoint. Those were the project status report, the non-labor detail report, and the labor summary report. Those are typically the main, kind of touchstones that from a project management perspective, when you're looking at financial performance and things like that, that you can use. The other thing that I would say about that particular, application that I like is that I have the ability to, if I have complex Seadrolls that have to be done and things like that, I have the ability to using, your favorite BI tool, right? You could use Cognos, which, comes in with CostPoint, or you can use, your Power BI or, what various applications depending upon your needs, but you can essentially pull the data and do with it whatever you need to, as long as the project structure supports the contract. I always go back to that. Like that's the main source of it, as long as you've set up your structure to account for the cost and so that you can parse it out, then you have a lot of flexibility. So
Okay, well, that is the last question that we had. So I'm going to move to the final slide. So I want to thank everyone for attending today. Certainly want to thank Susan and Sarah for the great presentation. On the screen, you'll see their email addresses. If you have any questions about what you've seen today or anything else about project management, please do not hesitate to reach out to them. As I mentioned at the beginning of the webinar, we will be making the presentation recording and presentation slides available in the coming days. So please keep an eye out for an email with links to both of those items. So again, thank you for your time today, and we look forward to seeing you on the next webinar.
Thank you.
Thanks.